Hello everyone, welcome back to another daily trading forecast, and today is the 26th of May 2021. So we are into the third trading day of the week. Now I just want to kick off this video by recap. I just want to recap the forecast I did for the US oil yesterday. So quick one is that oil has rebounded and recovered losses from last week, but it's once again resisted at the top of the symmetrical triangle, which you can see right here. Commodity prices has been somewhat cooling off a little as China clamps down on hoarding of supply, which could also somewhat cool off the oil market for a short while. So I'm looking at something that is short term. So therefore, you may consider sell at the top of the range. And I mean, this is just a very simple and straightforward range market trading strategy. Yesterday, from up to now, we have seen that the US oil has really shown resistance at the top of the symmetrical triangle or the entire ranging market right here. So this is something you can consider for today if you are also agreeable to this range and to this top, and can just go and go for a sell, targeting somewhere at 64, because that is the equilibrium of the entire symmetrical triangle. And on the other hand, my view for the US oil in a mid to longer term basis is that it is still going to appreciate, mainly because of inflation that is still rising, and oil as one of the most focused commodity, and I mean it is something that's been used for almost everything from manufacturing, all the way to consumers. So if you're thinking of shorting it, look at it in the shorter time frame, take profits as soon as you can, and you might want to consider buying the oil later on. All right, next I just want to touch on, let's go on to the gold. So yesterday, I mean, I've been talking about gold for almost every single day, and in all my videos, and true enough, we have seen gold channeling out of this previous riding channel, showing very strong signs of a bullish market. And of course, rising inflation is always good for the gold. And yesterday, gold has jumped right from a low of about 1,872, and by today it has already reached 1,907. So that means it has finally broke above 1,900 psychological level, and that is a very strong sign that tells us that the gold will continue to rise in the week or in the following week. So right now, if we go to a smaller time frame in the 1 hourly charts, if you are still very bullish on the gold, which I myself personally thinks the same way, right now there is a riding channel again in the smaller time frame, in the 1 hourly time frame, where we see that the price is pulling back from the top of this minor channel, came down to this level right now and found some support where I did place some buy limit orders right here, and it has been triggered. Okay, but nevertheless, we want to be prepared for a deeper pullback, and if it does, the next level I will be looking at is right here. As you can see, there's an inside bar formation right here. It is a previous high in 19th of May, and therefore this could provide a pretty good support or a demand to buy the gold again should the price actually pulls back even further. So that is for the gold, very straightforward. And in terms of the targets, like I've been saying for quite some time, I'm looking at 1,950 that is one of the most important supply level for the gold before it actually goes on to break higher over $2,000 and even further. So but other than that, we also want to be careful with 1910 to 1920. This is a 4.5 month supply zone. As we can see back then in last year, from November to this year January, we saw that the price has been climbing, but it came down and broke below this rising trend line, which definitely tells us that there are a lot of orders, a lot of volume right at this area. And true enough, when we use this, let me see, what is it called again? It is called a fixed range volume profile. When you use this indicator to measure at this price what is the kind of volume in the markets, it shows us that from this price at the top all the way to this swing low, right, most of the volume is being congested at this area, right? So therefore, like I said, this area will be important. To be more specific, it should be somewhere from excuse me, it should be somewhere from 1909 or 1910 to 1920. So that is pretty much the same as what I just as the level that I just given. So this is another important target we can look at, and that's pretty much for the gold. And so it goes the same for the silver. When gold climbs, when precious metals are rising, so is silver, right? I mean, silver is in huge demand, right? It is in huge demand for all kinds of electronic products, and for all the technology sectors, all the chips, everything involves silver. And when demand rises for all of this electronic stuff, then silver is definitely going to rise together with a rising inflation. So right now, it's very straightforward that we are seeing a rising channel right here. Yes, right now rebounded off from the bottom, came back up, but maybe it is still kind of ranging within this area. But nevertheless, if you were to look to buy right now, your risk is still pretty low. You just need to set it somewhere below channel. And then in terms of the target, if we just look at the weekly time frame, you can also see that there is a rising, or rather an ascending triangle right here that's forming. So I think in the long run, definitely silver will be bullish as well. And I still keep to my belief that the silver will be able to once again goes all the way back to a historical high of $50 per ounce for the silver. Let's move on to some of the news that we have for this morning. This week, one of the main focus is the Kiwi against the US dollar. So this morning, the Reserve Bank of New Zealand has released its rate statement. So as expected, they hold the official cash rate unchanged at a record low of 0.25% of the quarter basis point. And the thing I want to say is, we want to read this statement. The board, however, mentioned that it was in no hurry to raise rate until its inflation and employment targets are met, highlighting that domestic economic recovery from COVID-19 was still uneven. All right, I mean, that's just some way that, to tell the markets that, we just want to make sure that inflation is back, employment is back, everything, same as any central banks. But just before this, it also says that projected a 25 basis points rate hike to 0.5% by September 2022, which is about 1.5 years away from today, right? So that in itself is hawkish for the Kiwi against US dollar, and therefore we can look at more appreciation for Kiwi as well. So let's go back to the chart. Right here, Kiwi against the US dollar. in the 4-hourly time frame. So what happened once the news is released for this rate statement? We saw a very huge jump in the price from somewhere at 0.7323 all the way to 0.7310. That is about 70-80 pips in a very short time. That is definitely very bullish for Kiwi against US dollar based on this volatility, which is usually quite low. So right now it is at the top of the ranging markets, right? And although there is definitely some form of a resistance, but for the price to go all the way below the range and comes all the way back to the top, usually in my experience is that it will be able to continue to rise. And definitely if we look at the entire trend right here, obviously the markets is definitely more bullish in a sense. And in fact we can see this rising channel all the way since the pandemic started, right? So constant support right here all the way, and right now we're seeing the price going up again. Still we definitely still expect commodity prices to continue to climb. So currency like the Kiwi definitely will benefit from it. So in terms of how we can move on from here, is that we can definitely wait for some sort of pullback, right, in the price. Usually I would suggest about 30 pips before you try to go and chase after the markets. I mean, we always wait for pullback. That is a very straightforward principle that I always practice. I don't chase it. You don't just buy at the resistance, right? I mean, that is very straightforward. And even at times when it breaks above, I usually will always wait for a pullback, right, to the breakout level before I buy. Otherwise, if I chase at the high, I risk my risk is much higher as compared to my reward. That's very straightforward. And if it continues to rise, then the next target that we can look at is all the way to 0.7461 or 0.7460. That's because this is the equilibrium of the entire market for the very long time. If you look at the monthly time frame right here, this equilibrium level, why is it so-called equilibrium? Because obviously is a strong support throughout more than a decade, all right, all the way from 2007 or even 2004 has been great resistance, right? So I mean, it should be obvious to the eyes right now, so don't have to explain too much. And of course we are seeing a very strong rising channel. Yep, so I definitely don't think that there's any reason why we should not go and buy. In fact, if I were to stretch this out a little bit, it's a breakout of a symmetrical triangle, a breakout of a consolidation right here. So yes, definitely I'm all in to buy the Kiwi against US dollar at the target equilibrium level as the first level, and eventually I do believe it will continue to go even higher while the dollar is still weakening at the same time. So that's for the Kiwi against the US dollar. Next, let's talk a little bit about the euro against the US dollar. So as of now, up to now, it is still very much according to what I forecast. I always thought that euro against US dollar will continue to appreciate. So some news to actually go through, or some economic data, is that yesterday the business climate indicator for Germany rose to 99.2 in May 2021. So it is good for, and you can see from the data, okay, all the way back to 2020, and right now maybe I just put it a 1 year, a 1 year time frame. Right now it is highest, right? It's already at its highest. Business confidence has already increase, rose for the eurozone, definitely, and that's definitely going to be good for its currency. So these are just some of the things you want to take note of when it comes to trading its currency. So right now, euro against US dollar, it is about to reach, right, 1.2270. I put a level right here because this level is the breakout level of the previous riding channel, and usually in this case there will be some sort of a resistance, which we definitely want to take note of. Just like when it first broke out of this trend line, you can see that there is always resistance at breakouts level. So this is how I always look at supply and demand zone. So right now it's about to reach this price, but as we know, as we can see from the entire trend, we are definitely expecting the euro against US dollar to rise even further. So expect some resistance, but when it pulls back, let's go all the way to the 1 hourly time frame. Let's say if it pulls back, I think again, wait for look for the breakout level, the demand zone, and the first one that we can see right away, right off the bat, 1.2230. This is where you want to continue to buy the euro against US dollar. If you're really bullish on it, you may even want to consider buying it right now. But of course, you got to be looking at a very short term. Your stop loss will be pretty tight as well, so it should be in consideration as part of a trading strategy. And anyway, in terms of the targets, so either you can buy it right here, or you can just wait for the pullback back to this level, then you choose to buy it again. Or once you got in, the targets definitely back to the resistance right here, and then all the way to the previous high, right, at 1.2350, and then going even further from it. Now, one of the things that why I'm so bullish on the euro against US dollar, fundamentally we know that the US dollar is going to depreciate even further, thanks to the central bank for whatever they're doing right now, the unprecedented printing amount of money printed. And the other thing is, technically speaking, it has already broke out from a very very major falling trend line, and you can see the U shape right here, the W shape right here that's forming. I mean, everything points to a stronger euro against the US dollar or weakening US dollar. However you look at it, it's the same. So yeah, I'll still continue to keep my view for euro dollar as bullish, definitely. Last but not least, let's go through some of the Bitcoin news. So we saw that Bitcoin has rallied towards the 40,000 level. So some recovery from some of the ground lost in this month's volatile route. So that's where's the there was a sentence that alright, yeah, it's right here. The end of Bitcoin strike above the 200-day average and the dragon. This spike in volatility are not good signs if history is any kind of a guidance at all. So it simply means to say that well, there's a lot of volatility right now in the crypto markets for the Bitcoin, but when it actually came crashing down and all the way below the 200 moving average, that volatility is more towards a sell-off. So in short, it's trying to say that there'll be even more sell-off in the near future for the Bitcoin, which is very normal because of fear. I mean, a lot of people must have lost quite a bit of money in this sell-off as well. So again, sticking to my plan, I'm waiting for the. I already expected the price will continue to rebound from here, right? And I'm just waiting for it to go all the way back to where? So in the daily time frame, just waiting for it to go back to this neckline, right? This very important supply zone at 47,000 all the way to 49,000 in this area. Definitely I'll be looking for a sell, an opportunity to sell, and the rest is pretty much the same as what I have been talking about in my past few videos. And yeah, I think we can just stop here for the Bitcoin. Last but not least, quick one for the US stock market. So apparently this formation, right, which I've been talking about, has completed or it has came through. So right now it is at a important level, once again 13,700, because that is the neckline of this M-shape formation. So as according to what I've been seeing in the markets, is that after the breakout from this falling trend line, just like maybe if you look at the previous one, right? Once it broke out, it usually finds a resistance somewhere. Well, if I use the Fibonacci, usually it's the 61.8%, and as of right now, I think it's somewhere close to 78.6. So within this region, 61.8 to 78.6%, this zone itself, we can definitely consider to sell again, because honestly speaking, as of now, it is getting very different from the past few months, where every dip in the stock market you just climb back very quickly. And one thing you want to take note of is also that the pullback this time, alright, the pullback this time is only 8%. Well, previously, right here is about 12%. Right here is about 14%. And of course, all right, we don't talk about this because this is the crash during the pandemic. But you can see that for whenever the, right, like in this case for the NASDAQ, when it pulls back, it usually pulls back more than 10% at the very least. And right now, right here, it is only 7%. So which also means to say that there is a possibility that we might see it going down even further, especially for NASDAQ tech shares company, especially with what's happening in the Bitcoin market, in the crypto market right now. It is definitely very possible for it to pull back even further, right? So at least technically speaking, right now we have a resistance similar to what we have been the kind of things that we have seen in the past. I think we can definitely look to sell right now at this price, either today. I think by tonight we can probably have a chance to do so. Right now, as you can see right here, it's forming something like M shape as well. So do take note, do look out for this trade. Definitely I'll be looking at it, and if I were to sell, I will have my stop loss above the 78.6% level, and targeting at least the 61.8% of this swing low to swing high. So that will be somewhere at 13,200. I'll just make it 13,300, easy for me to remember. And then there's a possibility it might go even lower. So that's pretty much for the NASDAQ, and that's all for today. Thank you for watching, and if you like what I've been sharing right here, do hit like and subscribe to my channel. And that's all. See you again tomorrow.